I mean, there's got to be a reason for wanting to have money in the bank account.
They just want security. They want to have their emergency fund funded by the cash out refi.
I want to have reserves, so I'm gonna do a cash out refinance. I haven't heard that one.
Right, obviously, yeah. They're like, hey, do this cash out refi. There's a recession in the near future. You won't be able to get access to your equity later, so you should do it now.
Like doomsday financing.
If you're watching this, you probably have equity in your home, but also some financial pressure. Maybe credit cards are piling up, maybe your business is in a slow patch, or you're just tired of spinning your wheels on a month-to-month basis. A cash out refinance might be the best move for you, but it also might not be the best move. So let's break it down the right way. Hi, welcome to the channel. We are the Clear Close, the mortgage experts that help you get clear to close on your next mortgage, whether it's a purchase or a refi. And in this video, we're gonna go over something called a cash out refinance, getting money into your pockets now and replacing your mortgage with a new one. And that might sound scary to you, but don't worry. If any of this information is overwhelming to you or confusing and you need to just talk to somebody, we've got your back. There's a link in the description or in the pinned comments, or if you're watching this on TV, there's gonna be a QR code up here. You can just go ahead and scan that with your phone. Use that to schedule a call with us. We'll go over through your options. We'll talk you through what a cash out refinance is. Or if you're looking for anything else like a HELOC or you're looking to purchase a home, we've got you covered on almost every front. Jason, today we're talking about cash out refinances, and some people may be familiar with it, some people may not be. So we're gonna do this video to explain why it makes sense to do it, when it doesn't make sense to do it, and like run through a few scenarios. Jason, let's go over what a cash out refinance is, maybe in comparison to a regular refinance.
Basically, they're both considered refinances. When it comes to the type, as you mentioned, it's either regular refinance loan or a cash out refinance. And when you look at a regular refinance, your primary goal is typically either A, to shorten the term, reduce the monthly payment, or lower the interest rate. And if you can get that as like a trifecta, hit all three at the same time, that is an ideal time to really go for a rate reduction loan, which is just a regular refinance that everybody's used to. The other option is a cash out refinance where you're going to realize some of the home equity that you've accrued over time, take that out with a new loan, increase the loan balance that's owed, because you're going to be paying off or getting a new loan. And then from there, hopefully you have a purpose that you've planned for to really leverage that new cash in hand, right? For investments, buying a rental property, making capital improvements to your primary home or rental or your business, for example. And then from there, you're just utilizing that or deploying it with the purpose. If you hear us say this a lot, we say there has to be a purpose for why you're using that equity. We're not advocates of some credit card type home equity instruments where they encourage you to swipe for cash back.
We don't encourage like gambling with that money or like YOLOing into the stock market. Maybe you do have an investment idea that's going to generate you additional cash, or it's going to be a really solid rate of return and that's very safe. So, Jason, is this like a second mortgage? Like you have your first mortgage and then you have a second one on top of it? Is it a total redo of your original loan?
It's not a new loan on top of what you currently have. A refinance means you're going to be refinancing the loan in question to replace it with a new one, hopefully with better terms, and that one that will better fit your family's needs at the end of the day.
So is there ever a situation where you might want to do a cash out refinance when the rates are higher?
It depends, because it's not the fact that the rates are higher should stop you from ever wanting to do a cash out. It's ultimately what the purpose is. Rate is just the current market climate of when you're trying to get the cash out, when you're trying to do that refinance. But if the rate is a factor, you have to come up with a plan for what the purpose of the cash out is. If you're cashing out to go on vacation, 99% of the time it doesn't make sense. 99%.
Yeah.
I'll tell you, like, are you sure you really want to do that? So I mean, there's always the one-off, right? Where I had a client many years ago. She was retired, She knew she had no one to pass the house down to. There's no one in her family to give it to. Everyone was passed. And she's like, this is my chance to YOLO, right? And
Mm.
I was like, and she's like, I don't care if the state takes it, whatever, it's not my problem. There's no one that's really gonna take this house, and I've got equity. I want to go on the cruise that I've never been able to go on. So like I've had those one-off situations, and that's why it's called a one-off. But outside of that, like
It's an exception.
it's that was the exception. But outside of that,
Right.
though, like traditionally, like you have to have a purpose for why you're gonna take tens or hundreds of thousands or millions of dollars out of your home equity and pay money back on it. Because again, it's a mortgage, it's a promise to pay. So if you don't have a purpose behind why you're gonna take it out, need to figure that out first.
Speaking about a plan and having good reasons, so what would you say are like the best reasons to do a strategic cash out refinance?
Majority of the people that do always look for cash out. It's either there's two camps. One, to consolidate debts from everyday spending that got out of control over time. Or the other flip side is I've built up equity and now I want to deploy that equity to grow other business ventures or expand my real estate holdings because they've seen what it looks like to be able to buy a home, have a tenant in it, and then they want to diversify and add two, three, four, five properties over the next couple of years. And then it's like, where else are you going to get that bulk capital to really deploy and make those decisions quickly at a very cheap price? So it's like, at those times, did you have enough equity to make that investment strategy successful? Was your plan solid? So that's how I see it. And if you don't have a good plan for it, then yeah, don't get a cash out refinance. It's not for you.
It's not like a panic move. It's more like um, you're strategically utilizing what's in your home, like the equity that you've built up, to achieve some sort of financial purpose, right?
Of course, like if you're looking at like if it cost you 1,000 a month, right, to borrow 100 grand. I'm just using just random numbers, 1,000 a month. But because of that 100 grand, you were able to generate over the next year 3 grand a month. Was that worth it to you? What difference does the interest make at that point? Because your plan was to take what cost you 1,000 bucks, but turn it into three. So you're 3xing your monthly expense on just that investment. The difference is if I take the 100 grand and I have to pay $1,000 a month and I buy $100,000 Mercedes, is that worth it? No, really though, is
Right.
it? It's because it's like that $100,000 quote expense investment is pure depreciation. And if you read any articles about cars, I love cars. That is the fastest depreciating car out there, right? You can spend 100 grand on a Mercedes, and in three
Yeah.
years it'll be worth like 45,000. You lost 55%. So it's like, what is the purpose? And you hear my little one, right? What is the purpose of the cash out refinance? And what is the purpose of deploying that kind of capital? Like, is it being smart?
We have a link in our description or in the show notes. Also, there's going to be a link in the comments if you guys want to schedule a call with us to discuss any of your options here. We don't just do cash out refinances or regular refinances. We do also things like HELOCs. We have a DSCR loan that's really good. We also do purchases as well. So definitely, if you want to schedule a call with us for any of your mortgage needs, that is available for you. But Jason, for people who are at home thinking about whether or not I should contact a clear close to do this, what are some of like the red flags that they need to be aware of or they can determine for themselves this is a good reason and this is not a good reason?
I mean, there's got to be a reason for wanting to have money in the bank account.
They
Like,
just want security. They want to have their emergency fund funded by the cash out refi.
I want to have reserves, so I'm going to do a cash out refinance. I haven't heard that one.
Right, obviously, yeah.
Or maybe it's because I just haven't had the opportunity to serve a customer that was looking for that kind of scenario. I typically wouldn't advise taking out mortgage debt to have rainy day funds. I would never do it. Not in my life stage, not at my point in my
But you
career.
know that there are like some salesmen, mortgage salesmen that pitch that. They're like, "Hey, do this HELOC or do this cash out refi. so that like if there's a recession in the near future, you won't be able to get access to your equity later. So
Like
you should do it
doomsday
now.
financing. Yeah.
Yeah.
I mean, you're scaring people into doing a loan. So if you ever feel like you've been pressured or scared into doing a loan, that to me is a red flag. It's not just the
Mm.
fact that they're saying, "Oh, hey, do a refinance and keep 100 grand in the bank as a rainy day." If it sounds like you're being pushed too hard to do something, it probably means you need to just pump the brakes. Like for me, like a red flag is if you're being pressured to take a loan where it might not be the best fit. And if you have any apprehension at all, that salesperson, that advisor, right? I want to call them an advisor. They should be advising you, right? Ultimately,
Yeah.
you're interviewing the mortgage banker that you're working with, and you have to trust them because it's your most important asset. So again, red flag. If the sales pitch sounds odd or too good to be true, take a step back. Just pause and just really reflect on what you're doing because you don't want to make an emotional decision on the most important asset or most expensive asset in your household.
And if I could just add this one part, it's kind of like a personality thing or like a discipline thing. But if you are, if you've dug yourself into a hole with debt in terms of like you've maxed out credit card lines, and if you've gotten yourself into like personal loans and your spending has increased over time, and there's not really a tight grasp on your finances, I would recommend getting all of that in check first before even thinking about using the equity in your house to consolidate debt, because the underlying problem, if it's not addressed, it's just going to compound even further, and now your house is on the line.
Like ultimately, we can't force you to change your like financial habits and spending, right? But we can give you advice on what could be a brighter path for you in the long term. Because and no matter how much we say do this, do that, or we advise against this, but are okay with that, you have to be the one that's maintaining yourself. You have to discipline yourself financially to stay within these guardrails. If you do, if because a cash out refinance for debt consolidation is your reset button to realign yourself financially so you don't get yourself back in that position. But I see more often than not, people do all of that, but the person that explained the reason for doing the cash out refinance didn't spend like an extra couple minutes saying these are the financial behaviors. We can't hold you to it, but this is what got you in that place. We need to make sure you make changes moving forward so we don't repeat this again. Because there's no
Yeah.
guarantee in the future you're going to be able to do another cash out refinance to do another financial reset. And that the last thing I want to see is clients just constantly refinancing every 6 months or a year, taking incrementally more and more cash out because they didn't figure out what the initial problem was. And it was
Hmm.
just an underlining issue with spending more than they can earn.
Yeah. At the Clear Close, we want to see you guys succeed. We want to see you guys utilize your equity, or if you don't have to, like, great, like, let's just be friends, right? You just subscribe and share us on YouTube, and so we can get paid by YouTube. Like, but we would love for you guys to be successful in whatever endeavor you're doing, which includes your personal spending habits. So,
Mhm.
with that being said, Jason, let's move on to some scenarios. Okay, this is like my favorite part of every episode where we talk about scenarios. Uh, so we're going to talk about the bright, flowery situation where it's a smart move. So let me set this up for you. All right, here we go. So person has current mortgage of $350,000 at an interest rate of 6.5%. Their home value, okay, is 600,000, and they want to do a cash out refi. The rate that they will refinance to is a 6.25, and they want to pull out like 100K, which means that their new mortgage balance will be 350 plus that 100, so $450,000. And like, this person wants to do the cash out refi because they want to consolidate their personal like credit card debt, which is coming out to like $1,200 a month on uh the monthly payments for those credit cards. But now that they have access to that 100K, what does this do for the person in terms of like cash?
It's the cookie cutter scenario for debt consolidation. You're leveraging the equity that you've accrued over time to pay off those high interest rate debts. Like very toxic debt. Like credit cards are anywhere between 19 to 29% from what I've seen on some statements. And you have personal loans that are anywhere between 8 to 18%, 19%. I just got an offer today from American Express for get a personal loan for 20 grand at 19%, Peter. That's insane. And the payment is only $800 or whatever it was. I was like, oh, great. So it's like, I'm wondering how many people are taking these offers, right? The pattern I normally see is people take the credit cards and they take a personal loan to pay off that credit card, but they didn't identify what the reason why those credit cards built up. And then the credit cards rebuild again. And then they try to get another personal loan. And that cycle expands and you end up with now 100K in debt in a mix of credit cards and personal loans. And it's definitely not $1,200 a month if it's 100,000 in those debts. On average, from what I've seen, that's actually double. It's usually like probably closer to $2,500 in minimum payments. So for them, yeah, it's smart because you're now leveraging your home equity to really save money on interest. And not just interest, you're now paying down debt that has ballooned and stayed there. Because those debts, when they're in the teens or the 20% range, it's a mountain. Like you're already stretched, and they're like keeping you in chains. You're being imprisoned by that debt. It's gonna keep you up at night. It's not a fun place to be. So it's like, yes, you have to fix that. And if you're lucky and you have the equity to do so, doesn't matter if it's 6% or 7%. It's financial reset. Number two, though, is after you get that refinance, like what are you going to do about it moving forward? Like we're not financial advisors, but I can tell you what I've seen as poor financial behaviors. And just to repeat that again, that's going to put you in a position where you're not going to be able to refinance, or you may ultimately have worst case scenario, sell your home, right? So be careful. It's just, it's gonna create savings. It's gonna free up cash flow. And the other flip side too, that you really need to sit down is like, if it's gonna save you $2,000 a month, like what are you gonna do with the savings from the cash flow monthly? Because obviously, if you're able to do the refinance, you have the income to make it work. What financial decisions can you commit yourself to ensuring you build a nest egg? You have a financial security blanket that's not your home equity. And then from there, how are you going to repay it? And there's multiple scenarios. And I always run this for all our clients. When we do a cash out refinance, especially for debt consolidation.
There's not only one way to leverage the equity in your house. A cash out refinance is a great tool, but we also have products like a HELOC, home equity line of credit. And we've done a ton of videos on that. So look through our channel, find those videos on HELOC. We have a playlist ready for you guys. In either scenario, whether you're looking for a cash out refinance or a HELOC, or you just want to talk to somebody to walk through your options with you, give us a call. There's a link in the description. It's going to be in the pinned comment, and there's also going to be a QR code popping up on the screen. There's no pressure. We're not going to push you to make a decision that's not comfortable for you. It's just going to be advice that makes sense and tailored for your best interest.
I know people that really watch us, like you understand, we're a very purpose-driven team. So it's like, we're not here to just sell you a loan. And we'll definitely, I hope you can see that from getting to know us online. And there's no right or wrong with cash out or HELOC. It's which tool is the right one for you. Just right now in this market, we're just still seeing a little bit more benefit with the HELOC being a better tool today. So it's a different vehicle. But remember, our job isn't to just sell you a loan. It's our purpose here is to make sure whatever loans that you do get from us, whatever advice you get from us, we want you to be able to make the best decision for your financial future, not just today.
If you've enjoyed this video, please give it a like, share with someone that you love, someone that you care about that could benefit from this information, and subscribe to the channel. It goes a long way in helping this video get out to more people who could definitely use the information, and helps us stay sane in this crazy environment. So with that being said, thank you so much. We'll see you guys on the next one. Bye-bye. If you're interested in seeing what a HELOC can do for you, click this video on top, or If you're a first-time homebuyer and you want to know what an FHA loan is and what you can do and the secrets behind an FHA loan, click this link on the bottom.